Does your turtle soup trades look like this? Or this? Or maybe like this? Being able to tell which highs and which lows the market is going to use as a liquidity sweep can be very, very challenging. Through a lot of experience, I have developed my own way of looking at liquidity, and in this video, I'm going to teach you exactly how I know what highs and what lows are going to act as liquidity sweeps. That means that I'm able to catch the reversals of many markets because, again, I am selling the highs and I'm buying the lows. So without further ado, let's jump right onto the charts and let me show you exactly how I know what highs and what lows the price is going to use for liquidity sweeps. So by taking a look at my screen right now, you'll understand exactly what I'm about to teach you in this video. We are trying to figure out how we know when price is going to use highs or lows as a point of reversal or liquidity sweep. So how do we know whether the market is going to use a high as a point of reversal or sweep the high and continue to go higher? This is the ultimate question when it comes to liquidity sweeps. How do we know whether it's going to be a liquidity sweep or whether we're just going to continue to rally above the high or dump below the low? The problem that a lot of people have is that they will sell any high and they will buy any random low. That's simply not the way to go about it. There are certain highs in the market that you can anticipate to be a liquidity sweep, and there are certain lows in the market that you can anticipate to be a liquidity sweep. But we obviously cannot take any random high or any random low and anticipate that to be a liquidity sweep. So throughout my years, what I discovered about these reversals after liquidity sweeps is that the high or the low that we sweep is often made within an imbalance. So taking a look at this example, I have drawn out a fair value gap here. Now right here is not the first time that price has visited this fair value gap, because if we take a look over here, we can see that a high was made inside of this fair value gap before this high right here was made. That means that this high right here failed to do its job, which was to balance out this imbalance that we have right here. As you can see, there is still imbalance right here because the market did not fill the entire fair value gap. So when a new high comes up and gets put inside of that fair value gap, I am going to anticipate that that high is only being created inside of that fair value gap to fill out the imbalance which the first high failed to fill out. And that is exactly why I can anticipate that to act as a liquidity sweep and not rally higher, simply because the first high that we put inside of that fair value gap failed to fill the entire inefficiency. The new high that gets created within that same fair value gap and sweeps the prior one simply gets put in that imbalance to fill out the inefficiency which the other one failed to fill in. The same exact thing goes for the lows, but what we're going to do now is we're going to jump onto an actual chart and I'm going to show you a bunch of examples utilizing this exact system. So taking a look at my screen right now, we see a perfect example of this system playing out. If I go ahead and mark out this 15-minute imbalance that we have right here, what I immediately notice is that we have already put in a swing high inside of this inefficiency. Now this swing high obviously failed to fill in the entire inefficiency as there is still space between the top of the wick and the imbalance. I can therefore only anticipate that when we end up sweeping this high, it is going to be a reversal. It's going to be a liquidity sweep. Now taking the entire trading range into consideration, this becomes a lot more clear. So if I were to analyze this chart, I would take a look at what we did the last time we swept a high. So right here, we swept the previous external range high. After price swept that high, which it did right here, we saw absolutely no follow through to the upside. That is a very bearish sign. When we sweep a high and get no follow through, that typically means that the market is bearish. Because again, if it was bullish, we would have gotten follow through to the upside. In this case, we absolutely didn't. And as you'll be able to see, we have sell side liquidity resting right here. So currently we have an idea of the overall market direction. We have an idea of the overall market sentiment. And again, we got that idea because we looked at what price did previously when sweeping a high. Obviously it had no follow through to the upside, but it certainly had follow through to the downside. So I currently have a lot of reasons to believe that this high is going to act as a liquidity sweep and not rally through it. So what I'm going to do is I'm going to place my sell limit at that very high. My stop loss goes to the next internal range high. My take profit is going to go to this very obvious low hanging fruit that we see right over here. So I'm going to go ahead and play this trade out and we'll see exactly what happens. And as you can see, price did exactly what I expected it to do. The next high that we put inside of this inefficiency simply filled the imbalance and then we got the sell-off that we were looking for. So we only put in this high because this high failed to fill in this imbalance. And that is exactly how I am able to trust my liquidity sweeps, how I'm able to sell the highs and buy the lows. Now right here we have another great example of this trade playing out. This is on a lower time frame. The time frame before was a 15-minute time frame. We are now looking at a 2-minute time frame, and I want to show you how you can utilize this strategy as a continuation play as well. Now, when I say a continuation play, this means that instead of looking for a market reversal, you are utilizing the liquidity sweeps to follow the overall trend of the market. And again, it's all about adding as much confluence as possible. So what I immediately see when I look at this chart is the power of 3 that is currently playing out. Now, the power of 3 is the accumulation followed by the manipulation and then the distribution. So this is exactly what I would anticipate the market to do. And what I mean by that is we have the first stage of the power 3, which is the accumulation. We have the second stage, which is the manipulation. Then we have the third and final stage, which is called the distribution. So I'm going to anticipate that because the manipulation was at the lows, we are now going towards the equal highs that we have up here. So even though I'm utilizing liquidity sweeps in my system, I am using other concepts to gather more confidence that this liquidity sweep is in fact going to work. So we currently have the power of 3 playing out, and this low that we have right here is a low made inside of a 2-minute fair value gap. And as you can see, that low failed to fill the 2-minute fair value gap. So what I am going to do is I am going to buy that low, and I'm going to aim towards the equal highs that we have up here. Now, the great thing about this system is that it will often give you a very good risk to reward. The reason for this is because if this is in fact going to be a liquidity sweep, we can allow ourselves to have a very tight stop loss on it. And the reason for that is obviously because if it is going to be a liquidity sweep, we ideally shouldn't dig very deep below that low. So what I am going to do is keep a very tight stop loss on this, because again, if we come all the way down here, I am simply not going to trust that it is going to be a liquidity sweep. I want to see a wick down below the low and then an immediate reaction up towards the highs. So without further ado, let's play this trade out and see exactly what happens. And as you can see, it played out exactly how I wanted it to play out. We barely tapped below the low, and that low indeed did act as a liquidity sweep, and we reached the equal highs. Now again, we didn't only utilize the liquidity part, we also combined it with the power of 3, and obviously we had just swept sell side liquidity. We have equal highs left. We got bullish displacement after sweeping the lows. So it's all about looking at the overall market, getting as much context as possible and as much confluence as possible so that you have the absolute most confidence that you could have so that you execute exactly how you're supposed to execute. A lot of people know exactly what a perfect setup looks like, but will still take low quality setups because they lack patience. Now I'm going to show you how we can utilize this same system to get a daily bias. Right here, we are on Euro USD and we are on the daily chart. Now what we can see here is that we have a very large daily inefficiency here. The low that I have marked out is obviously a swing low made within that imbalance, and there's still a tiny bit left of the imbalance. That means it has not been filled yet. So here we are on a 15-minute time frame, and what we're going to do is we're going to wait for price to sweep that daily low and then look for a trade on the lower time frame in the opposite direction. So as you can see right there, we swept the low. We barely swept it, but we did sweep it. So what we're going to do now is look for an entry towards the upside because we are going to anticipate that to act as a liquidity sweep. So what I'm going to do now is look for a trade towards this swing high that we have right here on a 15-minute time frame. I already see an entry model playing out right here, which is the inversion fair value gap that we created right here on the 15-minute time frame. So we are going to aim for a 2.21R trade utilizing a 15-minute inversion fair value gap after our daily key level has been hit. Let's see what happens and if we are going to get filled here. And there we go. We were obviously very, very close to getting stopped out here. Luckily, we didn't. What you could have done is put your stop at the low and then went for a target that was further away, like the equal highs that we have up here. The whole point of this was to show you that you can look for these lows and highs on the higher time frame and then trade away from it once price has hit that on the lower time frame. So I really hope you enjoyed this video. This was my liquidity strategy. I know a lot of people have trouble identifying proper liquidity sweeps, so I really hope that this video helped you out. Thank you a lot for watching, and I'll see you in my next video.